Once you bought your first home, here's some other things you need to think about that aren't really related to you buying your first home. Number one is your kiwisaver. You can't use it anymore because you've used it already, and that means you need to wait until retirement. So putting it in a fund that suits that goal as opposed to the first home buyer goal is really important because they are almost completely opposite. Number two is thinking about insurance for yourself. So obviously having your house insured is a requirement of the bank, but there is no requirement that you get insurance. However, you should think about that because you now have an asset worth close to $1 million and a debt that is probably 80%, 90% of that value. So if you get sick and can't pay it, it'd be pretty crap for you to have to sell that after all your hard work. Obviously, if an accident, ACC will cover some of your pay, 80% of it, but not if you get sick. So having insurance in some form is probably a good idea to think about. And then the third thing, more of just me saying you should do this based on personal preference for the people that I talk to, is make sure you have a cash fund of at least 2 times your mortgage repayments so that you know that if you want to take a long holiday or there's a glitch at the bank or whatever, you know you're always going to have money in that account to pay your mortgage.